Hey everybody, it's Tom the Turtle Trader here. It's Sunday night, the 23rd of August, and I got a couple of stocks I want you to keep on your swing trade watch list that I've been paying attention to. And there have been some stocks that have been beaten down, to be honest with you, lately, and they are actually on the rebound and looking good for a swing trade or a long-term hold, depending on your conviction on these stocks. And the two stocks I want to talk about today are PayPal and Adobe. So PayPal, PYPL, excuse me, and Adobe ADBE. So let's get into the charts and see what they're telling us and if these are good for our swing trade setups for the week of August 23rd. All right, so the first chart I want to take a look at obviously is PayPal. As you can see, PayPal had a downtrend that it is broken out of. Let's draw a quick trend line here. All right, we got a downtrend, multiple touches, even if we come up here. So it broke out last week. This week it traded a little sideways this week, but that's okay. We don't mind that. That's actually a good indicator that the stock is, instead of failing back down, that's consolidating. The RSI has been it's getting up there. It's pushing that 70 range, so we may see another week of consolidation. We do have a spinning top basically here on the weekly, so we need to see some confirmation here. I do like Adobe because number one, I'll tell you right honestly, I'm in Adobe, so that's one reason I do like it. But it's done really well, as you can see, since it found a lot of support down here. Let me draw a trend line for you guys here. Found a lot of support in this area right here. All right, so this $40 range, right? $40, a lot of support. Boom, 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 boom over the past few weeks. In fact, if you take a look at this, we see a nice W pattern that it formed. Right, here's your lows, your high, your low, and your breakout. And what was the breakout? Well, the trend line, excuse me. Sorry, let's get rid of that. And let's do another trend line here. So your neckline was right here at the $50.40 level, pretty much. And when you take a W pattern and measure from the neckline to its lowest point, which is roughly right about here, let's straighten that out a little bit. And then you take that and you drop that on top of the neckline, you'll see what the expected move was. And where was the expected move? Right where it's topping out right now. So what does that tell us? It tells us that we need to break above that level. And what is that level? Let's drag this up here. So we need to break right around here. Excuse me, all the way up here. Right here we go. So I would like to see Adobe break this level. As you can see, we've had a lot of touches there. Let's get rid of some of these lines. We've had a lot of touches at this level of 63.30. Let's just call it 63.30. 1, 2, 3, 4, 5, 6. So we need to break above that. So we need to break above 63.30. I would like 63.50, which is this little green candle here. And then we can continue to move up. So let's give us a little price action here. So on the $63 level. Our EMAs are starting to align nicely for us. So this is the 20 on the weekly, turning up towards the 50. This is the 50 on the purple. This light blue is our 100. And again, we've stayed above the 100 the past 2 weeks, which is nice. Way up here at 73 is our 200, and that's going to be important. I'll show you here in a second when we start drawing out some levels here on PayPal. So again, if we can break above that 63 level here, I'm looking forward to move up. Where are we going to move to? Well, let's take a look. Let's do some charting here. Half this red candle here, which would give us $65 range. Beautiful. Then we'll do another one here, clone to the top of this candle. And then we're at 68. And I'm going to jump just a little bit because we're already at the top. We're already close to the top of this candle here. Let's go to the halfway point of this candle here. And about there is halfway. And clone. 73. Oh, and look what we just crossed. That 200 EMA right there. So that's going to be important for us because that's going to be, if we can clear 63, that's our next big hurdle, right? We've got some smaller ones here, but we're clear of all the EMAs. And the EMAs are curling up. They're starting to chase us. If we can get EMAs to stack with the 20 to 50 or above, 20 goes above the 50, 50 catches up to the 100, we're looking good. If we could get the 50 to cross the 200, that's quite a ways away. We'd really be in a good position to continue to move up, maybe all the way back up here to $90. But that's down the road. So let's just look at this from a short-term perspective. So we're looking really good there. What does our Fibonacci tell us? You guys know I love the Fibonacci. Let's start at the bottom of this movement back here on June 8th on the weekly. Here, come back down to here. And we're right in range. We're in range of our Fibonacci, pretty close. 38% is at 63.88. Remember I said break above 63. Our 50, 66, 51, I got it at 65, so not too bad. Our golden ratio, 69.15. I got us at a level right around here at about 68.36, so 80 cents difference. And then all the way up here, measured move 100%. We'd have to break that 200, but that could be all the way back up here to 77. So it is setting up nicely overall. We need to see some volume pick up. The volume has been, this volume bar down here, this blue line is average, 20-day average volume. So it's touched it a few times, it's broke. I'd like to see volume start to pick up. We don't have to worry about earnings. Earnings are all the way in October, so there's nothing there to watch about that. What we need to do, what we do need to watch, again, is that volume. I want to see volume pick up. It was 52 million shares. On the average is closer to 74, so we need to pick that up down here again, the volume. And then as we move through these levels here, the 63 to the 65 level, we really need to see volume start to pick up. All right, so what are we concerned about with PayPal? Well, PayPal is in acquisition talks right now. Stripe, let's see, PayPal and Stripe, right? Stripe and private equity firm Advent International made a joint takeover bid about 53 million, which is only $60 a share. PayPal is rejecting it because they're saying, hey, that's too low. I've seen reports that the shares could be up to $73. So we have to watch that. Obviously, that is a major event that could affect the stock price. If we take a look at PayPal's tip ranks, I love tip ranks. You guys know I love tip ranks. I show you tip ranks almost every time. Tip ranks does a great job of taking all the analysts, all the data, and putting it into one nice form for you guys to look at. You take a look at the Smart Score. That's one of the easiest things to look at. Smart Score, you do show more. Analyst consensus is hold. That makes sense based on the price right now. Bloggers are getting bullish. Insiders are starting to pick up shares. Not huge. Hedge funds are increasing. That's nice to see. New sentiment is bullish. Technicals on that simple moving averages are obviously going to be negative. We just showed you, right? It's below the major. It's below the 200 on the EMA. So the SMAs are lagging. So it's picking up steam, but it's got to clear some of those to get back into positive. Their last earnings were pretty decent. We take a look at them, right? Largely constructive tone, underlying volume and revenue growth, Venmo, Braintree, and TP, right? Again, highlights revenue, Venmo and Braintree momentum stabilization. So I like PayPal to move up. The big thing is going to be obviously that acquisition news and information. Now, what if PayPal does not hold those levels? What if it breaks? What if it fails to break that 63 level? Well, then our next stop could be coming back down here a bit. We could have a reversal of fortune. We could come back down here, down to 60. Or we could come back down even to, I'm sorry, what is this right here? Yeah, 60. I'm sorry, 57, 58. So we could come back 60 to 58. That would actually be a really good buy zone if it does, because look, we got a lot of support. If you look to the left here, a lot of support on this level, 58 level. It found support, of course, when it dipped down here off that last earnings call back in February. But other than that, it's got a lot of support there. So if it does pull back, it could be another opportunity to get back in if we get confirmation that it holds and moves up. So that's PayPal, guys. I like PayPal. Now, next is we're going to talk about is Adobe. And I had that chart up, but I cleared it for some reason. Okay, here we go. Adobe, beaten down, right? AI is going to kill Adobe. Adobe's dead. Nobody wants Adobe. Well, Adobe has been crushed, right? Look at that trend line. But you're talking about a stock that at one point was $700, and now it's trading at 274, so a third of what it used to trade for, basically. But I'm seeing some signs here in Adobe. I've been watching it. What am I watching? Well, obviously, I'm watching it break this trend line. Again, it broke this trend line here. It's held 1, 2, 3 weeks now. It's held this trend line. So that's very good for the stock to move up. We see it does have some resistance right here on this right here, this red line right here. I'll give you another trend line here. All right, so we've had some resistance right here. It bounces here and has it cleared. So what does Adobe need to do? Adobe needs to clear that line. That line is at 275. So if 275 can be for an Adobe a clearance, actually 275.30 is really where it needs to clear. I think that's where it closed the other day. Yeah, 275.30, give or take a couple pennies. We need to clear. So I would actually like to see it clear more than this, this 284 level would actually be better confirmation. Why? Well, we're going to clear these levels here. Right, we're going to clear these two big candles here. We're going to be halfway up this big candle. That's really what I want to see. And the 50 is right here. So this purple line right here is the 50. You guys see that right there? That's the 50. So if we do our line up here to here, guess what? We clear the 50. The 50 is right at 282. So if we clear those lines, 285, then we can start to move up. And it could be some really big moves here. So our next line would be here at 299. We could call that 300 if we want. Our next move will be right here, right around here at 314. And then finally, we got to watch that 100 sitting up here. And that's going to be pretty close to where we're going to top out on this one. Pretty close, couple of dollars, 330. So Adobe is actually setting up nicely, guys. Volume again has to pick up. We'd like to see some volume pick up. And well, let's take a look at our Fibonacci's. Bottom, top, pullback down here. Fibonacci's are almost spot on where we just drew our levels. We're really close. What is this? 283. We picked 286. So $3 off a $300 stock. That's not bad. Our 50 is at 293. Our golden ratio is at 303. We said 300. And then we've got a full measured move all the way up to 336, where guess what I just said? We got to watch that 100. This is the 200 way up here at 379. So we don't have to worry about that for a while. But we do got to get through this 50. That's going to be the catalyst. Now, we do have some binary events. Let's clear all this out. We do have a binary event coming up here. We do have a binary event coming up on the 8th of September, and that is earnings coming up on 8th of September. And I'm sorry if you heard my granddaughter in the background. That's what happens when you live with your grandchildren live with you. Sorry, guys. That's life. I'm not going to edit it. I'm not going to edit it out. It's going to stay. All right, so we got August 8th earnings. So if we do take this play, if we do manage to get above this 283 level, and we take this play and take it up to 283 and take it up to this 300 level, or maybe even to this 313 level, we got to watch earnings. I will be out. If I get a move up here and break above it, I will be closing any position that's in the green before earnings. You got to be cautious of that always. You never know how earnings are going to come into the market. Companies can have great earnings and still have a but, and then they're in trouble. So we got to watch that. Now, if Adobe breaks down, what are we looking at? We got to look at the RSI on Adobe right now is actually really nice. It is 57 and climbing. So that's really nice, right? We're not even close. When bullish territory, the MACD is pulling up. Histograms are starting to print green. So we're moving up. We just got to watch that earnings play in a couple weeks. Daily, I like it on daily also. Daily, we actually crossed and held for the past 2 weeks above the 200. So this is the 200 right here. We've closed above that 200 for the past 2 days. It kept bumping. Now it's changed polarity. And again, you'll see this nice strong trend line here, right here. So if we can break above it and not get a false breakout like we did back here, but even going to 285 wouldn't be bad. We need to clear that on the daily. We need, back here we had a gap. Let me open that up a bit more so you guys can see it. So back in February we had a gap down, like a $7 gap down. If we can clear that, we could be off and running here on Adobe, guys. Again, marking up to where I talked about earlier on our chart on the weekly. We're looking pretty good. Again, we have a good RSI. RSI is right about crossing at 61. We got to watch the MACD on the daily, but the weekly, the bigger time pictures look pretty good. Now, if it does fail, if it fails to break through here, or we get maybe a little flash and then it pulls back down, where's our support? Well, our support first is going to be at 274.75. Then it's going to be here at around 272. And then finally, right here on this 20, we're looking at what's that? 260? Yeah, 260. So we're looking at 260 right here on the 20. That would be our last line in the sand on Adobe. Adobe on tip ranks again. Guys, I'll put my link for a tip ranks affiliate if you guys want to join tip ranks and get a discount on that. It'll be in my link down below, like they always say. All right, overview. It gets a 7, so it's okay. It's not great. It's more neutral. Hedge funds have increased. Hedge funds have picked up though. So hedge funds, again, are not in the business of losing money. They're buying because they see something here. Again, technicals don't look great. We just looked at the technicals. We saw why, right? I mean, the stock dropped 60%, and now it's trying to recover. Again, I'm looking at it for a swing trade, maybe into earnings, if not after earnings, depending on what happens on earnings. So we could take a look at that also, but we got to be aware of the earnings catalyst that's coming up on the 10th. All right, so those are your 2 plays for the week. I'll try and drop some more later on this week when we see some other plays start developing. But that's going to be it for tonight, guys. Let me close off by saying I want you guys to have a great week trading. I want you to trade slow, trade smart, and trade like a turtle. All right, everybody, have a great night.